You're listening to Nora and Noah Decode the Day, where markets meet meaning every morning.
Wow. It's really been something lately, hasn't it?
Yeah, a real roller coaster.
1 minute, everyone's bracing. The next, this wave of, optimism hits the markets. A lot of that seems tied to trade talk, right?
Definitely.
But you still get this feeling like there's something else going on underneath, waiting for something else to happen.
Mm-hmm. That caution is definitely there.
So for this deep dive, we're aiming to get past just the headlines. We want to figure out what's really driving these market moves.
Exactly. We've got this really detailed report here. It digs into how global markets reacted after the latest U.S.-China trade news, plus some other key economic bits.
Okay.
So the plan today is, unpack what caused those immediate spikes and dips, what concerns are still kind of lingering, and basically what signals you should really be watching to make sense of it all.
Got it. So the report kicks off talking about this initial jump for risk assets, they call them, as soon as that U.S.-China news broke.
Yeah, that's right.
Sounds like some Asian markets really, really reacted strongly.
Oh, absolutely. You saw futures in mainland China and Hong Kong jump pretty significantly.
Yeah.
Shows real local confidence, perhaps.
Interesting.
And U.S.-listed Chinese firms climbed, too.
Yeah.
Quite a bit, actually.
Mm-hmm.
That first surge was likely just relief,
Yeah.
Hope for less tension.
But then the report says that energy's sort of fizzled out when it reached Wall Street, mentions signs of exhaustion. What happened there?
Well, it's a really interesting contrast, isn't it?
Yeah.
Because the S&P 500, the NASDAQ 100, they did manage gains, but, pretty modest ones.
Right.
And U.S. futures actually ticked down slightly.
Yeah.
So it suggests maybe that first burst of good feeling just ran out of steam.
Mm.
The report talks about investors starting to pivot back to fundamentals, which often happens, right? After the initial reaction, people start asking, okay, what does this actually mean for earnings, for growth, long term?
Fundamentals. Okay, so maybe the underlying economic reality isn't quite lining up with that initial trade optimism.
That seems to be the concern.
There's a quote here from Mark Hackett at Nationwide. He says, investors may not like what they see when they look at those fundamentals. That sounds cautious.
It does. It really flags this question about whether the rally can last. Hackett's point about the market possibly swinging from oversold to overbought in record time. That's key.
Explain that a bit. Oversold to overbought.
Sure. So oversold basically means prices have dropped, maybe too much, and are likely to bounce back. Overbought is the flip side. Prices have shot up fast, maybe too fast, and could be due for a fall.
Okay, got it.
His worry is that if the basic economic strength isn't there to justify these higher prices, the market's pretty vulnerable, could easily pull back.
And it wasn't just vague good news about the talks, was it? The report mentions some specific details coming out of those negotiations.
Exactly. Specifics matter. We saw China, for instance, suspend its limits on exporting rare earth minerals for military use.
That sounds significant.
It's often seen as a bit of an olive branch in these talks. Plus, they agreed, both sides, on temporary tariff cuts for 90 days. These are real actions, signals they're willing to dial things back, at least for now.
But then, kind of throwing a wrench in the works, there was that other report saying the U.S. decided not to push for currency policy commitments in these deals. That seemed to make waves.
Oh, it did.
Yeah.
Straight away. The dollar, which had been kind of weak earlier, it just reversed and got stronger on that news.
Why would that happen?
Well, if the U.S. isn't trying to force agreements on exchange rates right now, it maybe reduces the chance of the dollar being pushed down politically in the near term.
Mm-hmm.
So traders bought dollars.
Yeah.
It just shows how everything's connected, trade, currency, policy.
Yeah, definitely. Okay, shifting gears slightly. The report also looks at economic data, stuff beyond the trade news. Oil prices moved, didn't they?
They did, yeah. Oil dropped for the second day straight. Turns out U.S. crude stockpiles had jumped biggest increase in 2 months.
And that means?
Well, it could point to a couple of things. Maybe worries about future demand, like is the economy slowing down?
Yeah.
Or it could just be too much supply right now. Either way, it tends to weigh on the overall economic mood.
Right. And you always have to watch the central banks, of course. The report notes the 10-year U.S. Treasury yield went up. What's driving that?
That rise in the 10-year yield, it mostly comes down to fewer people betting on the Federal Reserve cutting interest rates soon.
Ah, okay.
As that initial trade excitement cooled off a bit, and maybe looking at data that hasn't totally fallen off a cliff, the market's just not expecting those immediate rate cuts anymore. Higher yields can mean better growth expectations, or sometimes worries about inflation. It's complex.
And we heard from different Fed officials, too, with maybe slightly different takes.
Exactly. You had Austin Goolsbee saying, basically, let's not overreact to every market wiggle or policy hint. He felt the core economic data looked pretty steady. But then, Philip Jefferson, he flagged the risk that tariffs could slow growth and maybe push inflation up. Though he did add that he thinks monetary policy is in a good place to deal with that.
And Krishna Guha over at Evercore saw Jefferson's comments as actually leaning a bit dovish, even though other Fed talk has sounded more hawkish lately.
Yeah, Guha's read is interesting. It suggests that even with the U.S.-China situation seeming calmer, there's still this underlying caution at the Fed about the economy. Like they're not quite ready to declare victory over potential problems.
Makes sense. Okay, let's swing over to currency markets. The South Korean won, it had a pretty big jump. What was behind that?
Yeah, the won strengthened quite a bit. That followed reports that the U.S. and South Korean governments had actually talked about currency policies earlier in the month.
So just the news of talks was enough.
Often, yeah. News like that gets traders thinking, speculating about what might come next for the currency's value. And interestingly, you also saw nearby currencies, like the Japanese yen, tick up a bit too.
Gotcha. Now let's zoom in on the U.S. stock market sectors. Sounds like even with the overall market slightly up, it wasn't green across the board.
Not at all. The report actually says most U.S. sectors were down for the day.
Really?
Yeah. The big exceptions were, well, big tech and a couple of specific stocks. NVIDIA had a huge day, actually wiped out its losses for the whole year.
Wow.
And Boeing did well, too, thanks to that massive order from Qatar Airways. So it points more to specific stories driving things, not broad market confidence, maybe.
But Rick Gardner from RGA Investments sounds more upbeat, especially about tech. What's his take?
Gardner seems pretty bullish, yeah.
Yeah.
He's looking at the progress on the U.S.-China trade front and thinking, okay, this suggests a real resolution might actually be possible.
And he likes tech specifically.
He really highlights how tech has bounced back since those April lows. He points out tech wasn't leading earlier in the year when trade worries were higher.
So he thinks tech could keep leading the charge.
That's his view. He believes tech is set up well. Less trade friction helps them. Plus, all the excitement around AI is back.
Right. AI is huge again.
And he even argues the market might have already priced in a possible economic slowdown back during that April sell-off. So from his perspective, this tech strength could be sustainable. It could have legs, as he puts it.
Interesting perspective. Okay, finally, the report mentions some key economic data coming up soon in Asia that we should watch.
Yeah, a few things to keep an eye on. Trade numbers are coming out for India and Indonesia that gives a sense of global demand.
Okay.
Then there's money supply data from South Korea, which can hint at future economic activity. And employment figures from Australia, always important for gauging the health of their economy.
So those numbers could either support the current market mood or challenge it, I guess.
Precisely. They'll be important pieces of the puzzle.
Okay, so pulling this all together, it feels like we're in a bit of a delicate spot.
That sounds about right.
That initial excitement over trade seems to have definitely cooled, replaced by a harder look at the actual economic picture, the fundamentals. Central bank comments are, well, they're giving some signals, but also maybe some mixed messages. And the fact that different sectors are doing such different things, that feels significant.
It is. The report really paints this picture of a market glad for less trade conflict, but still very much aware of potential economic bumps ahead.
Yeah.
Those moves in bond yields, the different Fed voices, it all just highlights the tension, the uncertainty that's still out there.
It really hammers home why watching that upcoming data and any more trade news is so crucial, doesn't it?
Absolutely. Those seem like the key things that will really steer the market in the near term.
Which leads to a pretty interesting question, I think, for you listening.
Yeah.
Given this tech-led recovery we're seeing, but sitting alongside these kind of nagging worries about the wider economy, how sustainable do you actually think this trend is?
That's a great question. Maybe also, what are the longer-term effects of this whole shifting trade picture going to be? How does that change how you think about the markets? Definitely something to chew on as we see how this all continues to play out.
That's it for today's Decode. If you found this helpful, make sure to subscribe, and we'll catch you tomorrow, right here on Nora and Noah Decode the Day.